Hello, everyone, and welcome to another episode of The Delta, a podcast about how blockchain and technology is changing our financial environment and discussing its impact on society. My name is Rustin Cavil. I'm the CEO and co founder of Coast. Today, we have my co founder, Dan Durning, in the conversation, as well as Zach Fowler. Zach is a content creator within the Web3 space and is currently writing Unstable Insights, a newsletter dedicated to stablecoins and blockchain payments. Zach, thanks so much for joining us in this episode. We're excited to chat with you today.
Yeah, thanks for having me, guys. It's been good. I think we've known each other a little over a year now. Started all on LinkedIn, and it's always great to connect. I think we've done a few podcasts when me and Christian and were doing them back in the day. So it's always good to get online with you guys.
Absolutely. I think LinkedIn has been just an incredible resource within the Web3 space. I spent most of my time on X, formerly known as Twitter, and then have just found LinkedIn as being such a rich resource for being able to connect with other like minded individuals who are working and doing hard things in this space. And excited to chat with you. Today's conversation is just going to be primarily centered around blockchain payments and stablecoins, which is, I guess, a huge interest of Zach's. And so, Zach, maybe just to kick us off, do you want to give us a little bit of a history lesson of how you got into the digital asset space and kind of what led you to your passion and interest in stablecoins?
Yeah, I'll try to keep it, really high level. It kind of flows into the topic of like why even you should get involved in LinkedIn, whether that's I don't know, call it professionally, semi-professionally, even just as a social media platform in general. I know there's I forget his name, but he's from Board Ape Yacht Club, but he's been having a thread in a series recently where he's like, just I'm getting off of X and I'm going more and more to LinkedIn, and he's not some, has a PFP on the LinkedIn and a very different style, which I like seeing coming over to the platform. But just even acknowledging that there's opportunities on LinkedIn as compared to X, but there's still a place for both in the ecosystem, depending on what type of marketing you need, who you're trying to attract. But for me, LinkedIn played a pretty important part because it helped me get my first Web3 role by simply getting on LinkedIn, even though I was working at a total non Web3 job, and just starting to talk about my own observations. Like I was posting shorts that I was also posting on Instagram, like really just trying to explore one, what's it like making content? But then two, what resonates with people? Do they even care? And then but I'm going to backtrack all the way to 2020 was when I kind of got into crypto. I was working in the mortgage space at the time, and call it mortgage finances. I think a lot of us in crypto, we had a background in real estate or traditional finance, and it eventually pushed us down the crypto rabbit hole. And that was very much my story. But it happened to be at the same time the company I was with was merging with, was going through a merger, but also was one of the first companies to sell a HELOC product, so a home equity line of credit, that was powered by a blockchain by Figure, which they're kind of a sleeper in the RWA space right now. But I think they have, if I'm not mistaken, like fact check me on this, but billions on their provenance blockchain, but they just aren't super consumer focused. That being said, they were closing HELOCs in like 3 to 5 days, powered by their blockchain to help underwrite the loans. And it was completely replacing the job that was taking me and our team 30 days to do. And it was cheaper. The rates were lower. It was just win, win, win. And so going through that process, it was like, okay, I'm seeing how manual it is to underwrite loans. I'm seeing how long it takes money to move with having to reach the funding dates. Sometimes we could have closed the loan faster, but it was we missed the wire date, or we're waiting for funds to settle into a bank account. Even when the client's having to move funds between their own personal bank accounts, it was taking days, and not to mention the costs. And so then I heard about these cool things called stablecoins and blockchain and Ethereum, and that sent me down the rabbit hole. And so as I'm learning this industry, I'm not a veteran by any means. I was maybe in it for a year. I'm seeing how this technology could actually fix the problems that I'm experiencing in my day-to-day work and with our clients. From there, I just got a little obsessive about crypto and was like, I want to work in the space full time. I don't want this to be like the 5 to 9. I want this to be like my 9 to 5. And so started making some content on LinkedIn, just applied for jobs. I was kind of doing sales for a brief stint after the mortgage industry, and sold myself into a first role with Rise, which was a crypto fiat payroll. So same thing. There was a lot of international payments. So I'm already familiar with payments. I went down the XRP cross border payments rabbit hole, and so it was kind of just double clicking even deeper onto stablecoin payments, which even led me down the route here, which says, okay, great, we're doing HR, we're doing payroll on chain. Which part of this, especially as I'm still making content, was garnering interest not only by my audience but also myself, and it was just stablecoins. And so I said, I think this is another area too, which, and you guys can probably attest to this, when you're making content, you'll start to notice what people want to watch, what people respond to better, whether it's people whether it's people you don't know. And so I'm just really taking what has resonated with my audience that I also resonate and like, and just going a little bit deeper now. So
It's
there's
so
a little bit of a background.
I love it. It's so fascinating to hear different people's entry into this space. Mine was predominantly with NFTs, and for kind of a similar reason. I previously worked in real estate in the mortgage industry, and I was just thinking, why can't title be placed
Oh,
on the blockchain? Why is that process so expensive and cumbersome? I refinanced my house a few years back and had to re-go through that process and spend thousands of dollars to do so. And so, yeah, that was kind of my foray into this space. And I think it's interesting that you came in through the route of stables. Stablecoins, I think, traditionally within the crypto space are massively overlooked.
hmm.
It's just like, oh yeah, that's a stablecoin. It's pegged to the US dollar or whatever other currency or token that they're wanting to peg it to. And I think it's interesting that you came in through that route. And so maybe can we dive a little bit into what you're seeing within the stablecoin market, why it's important to the space, and yeah, just maybe your insights and perspective on that.
Yeah, I mean, I think for the biggest thing for the longest time, like you said, stablecoins were kind of the sleeper pick. They were created to solve a niche problem, which was just simply having liquidity on chain for investors and traders to move in and out of. And then it was like, oh, hey, they can also do this cool thing where we can send money now worldwide, cheaper, faster, and cut out the middleman. And so it almost came up as a byproduct. They weren't looking to solve the necessary problems of TradFi payments. And if you look for probably I'd say from a good span of like 2018 to 20, I mean, you could probably argue like into 2022, um, payment companies had come and gone in the stablecoins payment space. There's obviously P2P activity, and now we're starting to see an emergence of not only alternative stablecoins with payments kind of built and integrated into them natively, like PYUSD, even USD3 from stablecoin.com, which saying, hey, we don't need to keep on looking for this killer product, blockchain product market fit product. We already have it with stablecoins. How do we kind of double down on that? Because one thing that was interesting at Rise is we came across Web2 companies, totally just people you would never look at and think, oh, they're operating off of stablecoins. I'm not talking about like accepting it payments, but their core team internal operations is dependent on stablecoins because of where their team is located around the world. So when we look at this market and what the problems that stablecoin payments are trying to address, we naturally want to go to consumer payments in the US when it's so much bigger than that. Um, and as people are searching for rails, even in 2024, just to get USD, more people are being exposed, with better infrastructure tooling, better wallets to use stablecoins on a day-to-day basis. So I think we hit a point where, yeah, they hit a nice growth trajectory, and we're kind of going through that second, call it almost parabolic phase, mixed with as we go into the next, well, controversial, but later part of the bull run. I don't know. I'm not going to say that we're not in one, but it definitely doesn't feel like one right now as of September 10th.
Yeah, I completely agree. We've been going sideways for months now at this point, and I'm still of the opinion that we are very well into a bull cycle, though I believe that we probably hit the halfway point. But this is where it really gets interesting. And you mentioned something a second ago that I want to dig into a little bit. For people in the US, we have obviously easy access to the US dollar. In other countries who have maybe severely depreciating fiat currencies, they're looking for something stable. And for many countries, they are looking for US dollars. So then rather than trying to figure out how to purchase US treasuries or some other mechanism to have exposure to the US dollar, they can literally just buy USDC or USDT or some other USD pegged stablecoin and be able to gain access and protection from potential inflation risk within their own currencies. Is that kind of what I guess drew you in from a international perspective, or is it mostly from a frictionless method of payments?
I'd say probably more the frictionless method of payments. But then that was the quick like second option. It was also the other like aha moment, especially when you look about now, like how do I actually go and get a bank account? Like even as a US citizen, it's not that easy of a process. Like it's not unheard of well, it's definitely less common, but I still come across people that don't necessarily have a ton of bank accounts, or they still don't even want to use a bank account. Like there's not a complete there's a big subset of people, especially in the US, that still don't trust the banks. So now when you have a third option that says I can digitally transact, I can custody my money, I can have exposure to this, because there's a lot of risks involved in holding large amounts of cash. Um, I can still negate those risks with really the click of the button and copying down 25 word seed phrase. That opens up a whole new sector for people to be banked not only in the US, but then, like you said, internationally as well. There is that bit in the US where we don't really realize how like the lack of people that actually do have a bank account don't have access to the new digital economy. So being able to go and access that with a click of the button, as long as you have access to Wi-Fi, which even now there's some projects out there that are actually allowing you to send blockchain payments. I think it's on Sui, without even having Wi-Fi, just over cellular. I think like I said, the opportunity to bank the unbanked is just we're reaching a stage that we haven't ever experienced before.
At what point do you think, so within the US, we have apps like Cash App and Venmo that have made transacting between people peer to peer pretty seamless, even though there is a delay in being able to withdraw your capital into a bank account or being able to use it if someone doesn't have a bank account at all. At what point do you think that the core infrastructure or technology behind applications like that will be blockchain driven? Or do you think it will be a new set of applications that arise that will handle that peer-to-peer um, payments space? And I would love Dan's insight on this as well. So prior to working on Coast, he ran a payments product and is very well versed in the complexities and nuances of US payments. And so, yeah, I would love both of your insights on that.
Go for it, Dan.
Yeah, I mean, I just love that you focus so much on payments. I think it's such an sort of undervalued or just even appreciated space within. I mean, it's international, but even domestically, like our financial system of transacting peer to peer or peer to business, it runs on the ACH network, which was built in like the 1980s and hasn't really been updated. 3 to 5 days to settle payments. The product I used to work on specifically looked at rent payments or helped people
Mm.
facilitate rent payments. So tenants paying landlords. And I mean, most folks don't understand that when you send a payment through wires or say the ACH network, it does take several days for your bank to tell the other bank, oh, yes, I did have the funds in my account. And then the other bank to say, oh, yes, we received the funds and we validated that you had enough funds to cover that. And, ACH has like all these return codes. So why do payments fail? Most often insufficient funds, right? And it's like, are there ways that we could make that easier or simpler or faster? Because for a lot of folks, they don't have time to worry about a payment that they made on Friday and then come Tuesday hasn't even settled yet because it doesn't operate on weekends, doesn't operate on holidays. So I think what you're talking about when it comes to using stablecoins and payments, it really is like a better user experience as well because folks can almost instantly see that a payment was successful or not. And I guess my take is really just that this is the starting point, I think, for a lot of faster rails for transacting. And so to answer Rustin's question around Venmo and existing peer-to-peer payment platforms, I think it'll be an option, at least, until eventually there's a turning point where everyone adopts stablecoins and blockchain as the rails. I just think that there's too much power sort of established in the existing ACH network between banks, and they lobby to maintain that system, and it's kind of backed by the government and overseen by the government. So I think there's a lot of interest and power around regulating that and wanting that to be the status quo. So yeah, my take is that it will eventually happen. It'll just take time, and it'll probably start as just an option available within Venmo in the short term.
Yeah, I think, one thing it gets mentioned all the time on LinkedIn, but it just goes back to like regulatory concerns. So like, I'm not even going to go super deep down that rabbit hole. I guess I'm just going to preface this whole conversation by saying that, yes, if we're talking with anything with the stable coins in the US, it's going to be a little asterisk next to it pending, regulatory clarity. I think you had Taylor Zork on here. He's mentioned multiple times. He's like, until we can even get past that, simply sending USDC is not a taxable event, then like, why would businesses even expose themselves to that risk? And to be honest, why would you? I mean, if you are even a consumer, why would I, to kind of to this point with using Venmo, I can easily send peer-to-peer payments right now through Venmo or Zelle or whatever the instant payments is. Now, but now when I start to expand it, okay, do I have friends internationally? Is there a good international Venmo? PayPal's trying with Zoom, but I think there's a lot of people agree that there's not good an international Venmo option. And then two, going back to ultimately what does the tooling even look like to build that product? Like I said, with other on and off ramps, whether that's through your currency, what are the fees going to be associated with this? Almost like, are we just shifting the goalpost here? We're saying, hey, we're going to do Venmo, but now instead of Venmo, it's going to be a wallet. But now the wallet, there's still going to be fees now to off ramp instead of sending to your bank now faster. Because really, I think that's the two options. Instant fees are free, there's an instant fee, or you can wait 3 to 5 days. I think most of us in crypto would argue, well, you shouldn't even have to make that choice. It's your money. And we see the value of that if we're self-custodying the money and still having the ease to send the money, that's ultimately a greater positive than using Venmo. Because ultimately Venmo comes in and says, hey, we don't like your transaction history, or if they see that there's a certain amount of funds that look like it would be for business use, well, now they're going to tax those funds, which again, for me, feels like an invasion of privacy and is a strong push to go say, hey, I want to use a wallet and have more sovereignty over my money, which for a lot of people, when I'm kind of opening the door to, and this is a little tangent here, when I'm opening the door to like why crypto, and I go, actually, I don't even care so much about Bitcoin or Ethereum. I think these things called stablecoins are really cool. And I go, oh, well, tell me more. And then once I'm going down that rabbit hole and I get to the point of like, look, just answer me this. Do you keep money under your mattress or in your sock drawer? They go, yeah, I do. I don't want to have it all in the banks. I want to have control. I go, great. Now, what if you could do that digitally? Would you sleep better at night? Yes, I would. I go, great. There's a reason to be interested in stablecoins. And then it gets more interesting now when we're talking about yield-bearing stablecoins and actually having access to that risk-free rate, whatever it's 4 or 5%, and self-custody your money. When we look at the collapse of Silicon Valley Bank, and even was it way back when Lehman Brothers? When we look at some of those big falls, I don't want you holding my money. I'm just kind of over it at this point.
Do you feel
Which
like
would
it's
be my argument was why you don't want to use something like Venmo. Even if when you hold them together, they're like, oh, the user experience is the same. I would weight that under the hood as being important.
Completely agree. There have been countless stories of organizations who are essentially holding capital hostage. I know that PayPal's been blasted for this in the past, and countless other cases where people don't have access to their funds anymore. Whereas if you hold assets within a self-custodial wallet, then you always have access to it. You brought up a great point about yield-bearing stablecoins as well. Maybe just explain what those are to the audience who may not be familiar with them, and maybe contrast that a little bit with the traditional banking system and yields on savings accounts and things like that.
Yeah, I'll definitely do my best. I mean, so I know they all kind of operate slightly different. Like, for example, USDM is going to be a rebasing stable coin. And so if you start with 100 USDM, if it has 5% APY, in a year, you'd have 105. Other stable coins like Ondo Finance work similarly, although they're targeted to more an institutional investor outlook. But again, they're going to be automatically rebasing. Really just think if you're familiar with, liquid staking tokens for Ethereum, that's the easiest way for me to conceptualize them, is the same thing, but for stablecoins, and they're going and buying UST bonds, which are offering, whatever that 4 or 5% rate for. Most are buying short term, so 3 months. So generally, what most investors would agree are the safest form of yield. Their main difference is these companies, most of them are still generating revenue from a delta between the interest rate and then what they're providing back to the consumers. Now, USDM passes a lot more through the consumers. There's another one coming out. It's going to be STUSDC stake up protocol that'll actually be distributing all the revenue straight back to the stablecoin holder. And I also want to think that they do charge a small fee for minting it, but they're also passing that revenue back towards a token holder. So cool, just overall a cool ecosystem. But I think I did a post a while back on LinkedIn on how stablecoin businesses are absolute just money printers, and I think like Tether's doing like 13 million a day in revenue. Most people don't realize a lot of their revenue is coming simply from them buying these T-bonds. And they're the ones keeping the 3 to 4%. Now, when you're going to your bank and you're going and you want to, I think a lot of people open a money market fund or a high yield savings account. They're just buying the same thing. They're just doing it for you with the bank and saying the only way you're going to have access to this is to have us custody your funds. And the same thing with the stablecoin. To get this yield, whether it's a yield bearing stablecoin, I guess, or not yield bearing stablecoin, either way, to capture that interest, you have to hold this stablecoin. So I guess that leads into just another way to start thinking about stablecoins, is each stablecoin is kind of like its own bank at the end of the day. And which bank do you have to trust more? But it's interesting because, well, now we could still not have to trust an entity, especially with like decentralized stable coins like that. We can go back and we still trust the code, but still have the benefits of stable coins and a more traditional banking experience.
Fascinating. And I think it's very interesting that we've seen different types of stablecoin projects pop up. We've seen stablecoins that are essentially trying to back their treasury with BTC versus solely holding treasuries. I know that Tether holds billions of dollars of other assets along with US treasuries. Do you think that's kind of within this market for stablecoins? They're all trying to gain market share because, as you mentioned, they literally are printing money. They make enormous amount of monies within the blockchain space. Do you think that there will just be one that takes all or most in this case? Or do you think it will be more like banks where it's just based on personal choice?
I think I fall into the category that I think the latter is going to happen. I think when we look at, even you just look at the market caps for the crypto market. Look at where Bitcoin is at compared to the rest of the market. You look at the S&P 500. You look at where some of the titans of industry are at compared to the rest of the market. Really, you look at the distribution of wealth in the United States or the world. It would be I feel like it would be hard for me to think that this industry in this market would do anything other than what any market throughout the course of history has historically done. Now, that being said, will there be significant players that are in the lower portion of the curve that are serving specific markets, or they have native on and off ramps, or they make it easier to mint than Circle does, or they have a better API, or they offer a higher interest rate, or they speak to a certain sect of the DeFi crowd that cares, or they're going to, like Athena, they're going to be offering 20% APY for a certain amount of time. I think those will always come to go. I think that competition is healthy for the market. And I think they'll still succeed. But when we look at who's going to be the base layer of liquidity for crypto, it's probably still going to be Tether, USDC. I think, again, depending on the market, base ecosystem is a good one. For example, we'll see more, base liquidity pairs with USDC. Tether will probably still continue to dominate in Europe and Southeast Asia. And then we'll have other ones that still capture some market share, again, for their specific use cases, specific incentives they may be running. But still, I think the market's going to grow. They're going to grow proportionally. I don't think we're going to see a ton of, maybe every now and again, somebody's going back and forth and, knocking the other one down. But for the most, they'll kind of be growing all together.
Do you think that there's when we think about having multiple different stable coins, USDC, USDT, there's varying levels of transparency with what they hold on the balance sheet to
Mm.
actually peg the stable coin. And we've seen a number of stables depeg in the past. How do you see that risk for people who are holding these or maybe wanting to use them as an additional avenue of holding substantial amounts of capital? Um, are we just transferring risk from the traditional financial sector into another type of risk? Is it actually solving the problem there? And do you think that there is a better way of being able to provide transparency to consumers about the assets that are on the treasuries? What are your thoughts about the risk regarding stablecoins, DPEGs, things like that?
Yeah, this is definitely something I've thought about a lot, and I guess I'll give him a little shout out. I've never met him, but I do appreciate his content. His name's Bruce Bates on LinkedIn. Definitely takes a contrarian take sometimes, but I like just reading. Like I said, I think it's good to have people in your kind of call them social networks that are not just talking about the things that you agree with. But one of the things that he brought up that really made me think about stablecoins is that them being called stablecoins is really a misnomer, especially when we look at the rate that the U.S. dollar has been inflating. Like it's not worth a dollar. I mean, that's very clear. So I think stablecoins is definitely a little bit of a misphrasing. They, even though the value appears to be stable, they're not. They're more of, like I said, they're tokenized treasuries would probably be a better word. And then going into like what they're backed by, well, I don't know if from a consumer perspective, I don't know if consumers really care. They want the benefits, they want fast transactions, they want to be able to feel comfortable holding their money. I guess there's two ways to feel comfortable. Are you comfortable by how it's backed and depegging, or are you comfortable by the wallet that you hold it with? I guess you could kind of make a comparison that by banks, if there was a run on the bank and they couldn't withdraw your funds, well, that feels like a pretty big depeg to me. All I know is at the end of the day, I can't get my money. So again, I don't think consumers care what that risk is, or whether that's smart contract risk, whether that's a run on the banks, whether that's a depeg risk. I think they care what the risk is relative to what they were previously doing. So do we think the risk for depegging is greater than the risk for a Silicon Valley bank collapse? Well, depending on some stablecoins right now, that risk is way higher. I mean, again, like Athena, great, love what they're doing, love that they're being innovative, but I know there's definitely some people out there that are like this. I would not touch this. This feels like Terra Luna 2.0. And so from a personal perspective, when you asked, well, do they treat them like different banks? Well, yeah, I kind of do. I diversify my risk across the different banks. And for ones that have higher yield, maybe I'll go after those and have a smaller portion, but I'll probably have most of call it my stablecoin, yield farming portfolio in the big guys, in PYUSD, in USDC pairs, and USDT. So I don't know, does that answer your question? That's just kind of how I think about at least managing my own risk when it comes to the stable coins. And I guess I do see it more as like replacing one risk for another. Um, I guess at this stage, I just have to admit that I trust the code more than I trust the banks, and that's just where I've eventually gone.
I think, yeah, I tend to agree with that. And I think for people who are holding any substantial amount of capital, it is worth diversifying even across stablecoins. When we saw the SVB collapse, the USDC token created by Circle depegged because they had a substantial amount of assets with SVB. And I think that that's kind of opened a lot of people's eyes to, oh, these aren't necessarily stable all the time. It's all dependent on what the underlying infrastructure or holdings are. And I think that's been one of the biggest drawbacks of Tether is they haven't been extremely transparent about what kind of assets they hold. Are they going through the same types of mismatch of investments as some of the banks have that have cost bank runs in the past? And that's a huge question mark. I don't know whether that's the case or not, but it is something to be aware of for anyone who's holding a substantial amount of assets on stables. I think
Yeah.
that would just be my take
Well,
there.
and it's like hard because you look at like a decentralized stablecoin coin like Dai or like Go from Aave, and you're like, I do see the allure there, like knowing how this is minted, knowing how this is controlled. That being said, and I don't know, maybe this is just like breaking through years of conditioning, but there is a comfort knowing that your stablecoin is backed by the US dollar still. So like, is there a middle ground where now we can mint US dollar backed treasury, call them stablecoins, in a decentralized manner? But I don't know. Are they going to be able to form the entity? Again, maybe it's a nice blending of the two. But again, I guess it's one of those things where we're not going to be perfect. We're not going to get all the way there. It's not going to be our ideal scenario, and it's never been the ideal scenario. But you're managing risk at the end of the day when it comes to money.
We've talked a lot about stable coins and navigating finance in this new era. How do you think about incorporating digital assets and traditional assets in your personal financial plan?
So my wife does a lot of like keep like we still just run our whole family's finances off of a Google sheet. Probably like at least once a quarter, but ideally once a month, we'll go through and I'll pull up all, my wallets across the various chains and say, hey, here's where we're at, just so you know. Like, you definitely have the tendency to like out of sight, out of mind, and especially for my wife, it's like that money does not exist. And I think if you've been in crypto long enough, you found a wallet that has a couple $100, and you're like, yeah, that money definitely did not exist. Which is a problem that Coast solves. I mean, 100%, especially when I'm talking to my wife, I'm like, I want you to be able to see in real time, like, hey, here's our bank account, here's our retirement, or here's what our house is valued at. But also remember, like, if emergency popped up, like we do have these. And I personally, I love going and finding usually like two or three things I'm looking for: double digit stablecoin APY. Then can I park it somewhere that's also like farming some sort of airdrop, or is it just an incentive program, something like that? Like, I've been experimenting with like some DeFi products on Sui that are like options vaults. I know Sui is not a super popular chain. The user experience is actually great, and the yields, been good. There's also a lot of stuff going on with Solana right now and PYUSD where you can get 20% APY. And I think it's a great way to introduce people in the DeFi. Say, hey, look, what if you could just farm some of this token, make a few extra bucks, get 20% on your stable coins, and just do it for like 6 months. Just experiment. And if I think about it as a consumer, if I was getting into crypto today, I'd probably be like, oh yeah, that's way less risky than me going and buying this token that's fluctuating 20 to 30% on the daily. Now I have an easy route into DeFi, but now, well, my money's getting farther and farther away from the source. How can I actually keep control of this, manage it, not forget it? But again, if I have the opportunity, why am I going to have it in my savings account at Capital One or SoFi that gets 1% when I can go get 10%? Especially if you're some like self-employed person that you need to hold money, for taxes. Like, again, if I'm having money sitting there, I want it to be working for me. And it's great now that we have options that are they as safe as a bank? Are they as safe as just 5% on it? No, but if you're a little bit, open to risk and you can go get 10 or 20%, I think there's a decent place, not financial advice, but in your financial portfolio. And who knows where it'll go next. I mean, you might start providing liquidity. You might start, getting involved with more DeFi projects, which I think as, crypto advocates, that's something we want to start exposing people to.
Totally shifting gears away from stablecoins. More just generally, I'll speak candidly here as someone who has been on LinkedIn for probably 10 years. I just started making content on LinkedIn or even posting on LinkedIn within the past year and a half that I've been building our startup Coast. You, I feel like, have been a major inspiration in the freedom I feel and sort of empowerment to actually go say something on the internet and stand by it or just share. I think I heard a great quote the other day where it's like 2% of people on the internet are actually creating content, and most other people are just receiving content, which is where I was for a long time. So kudos to you just for posting so frequently. You have over 7,000 LinkedIn followers. I think what you post is really value additive. And I think I've come to know, as I've gotten further and further into Web3, a lot of different people. So my question is really how do you think about, and maybe this touches on your business development and sales experiences as well, how do you build relationships and community in Web3 or just on LinkedIn? And how do you think about those as resources that you can give back to and connect with?
Oh man, that's a great question. I mean, first I just have to say thank you. I mean, that's awesome to hear because I remember having those same people when I was first getting started. And I think one thing that's I'm not like 100% consistent. Like I actually at the filming of this, like I haven't posted in like almost over a week, and I think it's actually good to have phases where you go in and you do that. And same thing with engagement. Like I just really haven't been around the platform a ton. And for the sake of your sanity, if you take anything away from this from content, do that every once in a while. Um, it can just give you a nice refresh, maybe even the algorithm a little refresh as well. As far as like actually going through and doing business development in LinkedIn, comments. I mean, comments give you a great opportunity to engage with people and, I mean, have a little mini conversation that'll make actually conversing like in the DMs or on a Telegram message or even on a call that much easier. A lot of the friction that I've experienced, whether I'm doing like business development and sales, is because it's talk to meeting. You don't know me, and now you're trying to get to know me, and nobody really likes to do that if we're being honest. Um, and so content gives you that space to get to know me, kind of feel it out before you actually want to have a conversation with me. And now that we've had the chance to engage with each other's content, maybe even meet. Now, when you go back, that's what's actually going to start the network effects. Because now, Dan, you're going to go talk to your friend, or you're going to go talk to your co-founder and say, "Hey, I met this guy Zach. You should check out his content." And then I'm going saying, "Hey guys, next time I hear somebody talking about stablecoins or personal finance, hey, you should talk to my friends at Coast." That's where the network effects start to happening. And the simple little jumpstart is by you posting content on LinkedIn or even X, pick your platform. And now people just know a little bit about what you do, and it'll give them opportunity to say, do I want to know more or do I want to know less? But the number one way to guarantee that none of that'll happen is if you're just a ghost. You're not showing up in the comments. You don't show up even in the DMs. So even a simple thing is shooting your shot. Like sometimes your message sucks. It's a one word sentence. Maybe it's a hey, and maybe they don't even respond, but they respond 3 months later because they still kept on seeing your content. They still saw you commenting. They saw you supporting something that they did, or maybe you sent them that they mentioned in sent them a link to an article that was on theme to a comment they made the other day, and they go, "Oh wow, you're actually paying attention." People pay attention to people that pay attention to them. I mean, at the end of the day. And so it's kind of like when you're a kid on the playground, like who's going to start it first? Are you going to go up and say hi to them, or are they going to come up to say hi to you? Content gives you an opportunity to go up and say hi to them without even getting out of your seat.
I love that framing. Yeah, just having the courage to speak up and start the conversation. I think there's something really cool and powerful about Web3 too. Is this like DIY approach and
Hmm.
sort of you got to put yourself out there. And I grew up going to like punk and hardcore shows, and like the DIY part of the scene is like we do it ourselves. Like we will go to a church basement and make a show happen. And just show up and make it happen. And I think with Coast, at least, we've really started to try to lean into this more, but just building in public. And really, I think you did
Hmm.
this a lot with Rise and even with your newsletter and other, projects you're working on, where it's you build out in public and you share with people where you're at, what you're doing, how they can be a part of it or learn from maybe what you've experienced. And I just think that it's so overlooked, especially on a platform like LinkedIn, where so much of it is like bragging. It's really like not even like value additive. A lot of like generic content is just people being thrilled about, so and so. But I really think there's something cool about talking about what you're building within, the context of the business, but then also just who you are as a person and having the courage to start those conversations. So,
Yeah.
yeah, not a question there. Just really wanted to say how cool it is to see on LinkedIn.
No, I appreciate that. And it's interesting. I mean, one of the biggest things is actually um, just post it. Like I've
Yeah.
had some stuff where I've sat there and it took me 10 minutes to write and I thought this is going to be garbage, and it was my best performing post of the month. And I've had other ones where I obsess over it for an hour, and I edit it and I go back and forth and I'm like, man, this is good. I was getting even all the stats, just formatting them good, and it completely flops. But that's part of the process. I mean, because what it started for me, and even then I'm a year. more into this at this point. And I'm still trying to learn and figure out, like, okay, how can I word things? What happens when I post this style or use this type of opener? But you need to be able to go through that process, and it's going to start by you posting something and getting 4 likes. But you're going to start hitting your stride. You're going to see what your audience likes. You're going to see what starts to resonate with them. And that's where I'm actually excited to be in this stage now, going and launching Unstable Insights, where I was like, well, great. I've wanted to write a newsletter. I've write semi-long form content on LinkedIn. I'm not very good at X, short form content. I don't know. I'm too long-winded. We're 38 minutes into this. But I haven't even written long form, but okay, let me just make the newsletter and start promoting it. Just going to talk about it. And even then, Dan, you mentioned that sometimes, the posts that do really well are just the updates. Well, that's still an opportunity. What I did was I took the post, and yes, it was an update, but then I told the story about what I was going to go into and start doing next. So many, it's just, I'm just starting a new job. Okay, well, can you tell a story about that? And that's what ends up resonating, I find, most of the time. If I'm talking about stablecoins, here's a story about how I went to send a wire transfer, and it was expensive and slow. And now I talk about how stablecoins can fix that. It's not just stablecoins fix wire transfers and make payments faster. Nobody wants to read that. And so ultimately what to say is, start the process, start sooner than later, post consistently. Don't care about what you're even really posting for probably 3 to 6 months. And even right now, I think my newsletter maybe has, I don't know, I haven't checked it in probably a few weeks, but 60, 70 subscribers from little to no promoting. I think I've dropped the link 3 times, having it on my LinkedIn and just posting stablecoin content and mentioning a few times that I'm going to be doing this. And it's crazy how the things will come to you. Now I'm just at a stage, and Rustin, I'm sure this was one of your questions, where I have people I've met with, and I just have to start writing about them. And so if you're building in the stablecoin space, if you're building in the blockchain payment space, the best place to find me is LinkedIn. Zach Fowler. You can literally just comment on anything and DM me. I will more than likely respond. No promises on the time, though. And if you're within the category of what I'm writing about, I want to write about you with an unbiased take. Be completely for free for probably the next 3 months or so as I continue to build this audience. All I just ask is that you promote it across your social channels and mine. You can also find me on Telegram. It's ZDUBS_33. Same thing. If you're building in the space, I want to connect with you. And ultimately, my vision is to build that community. Hey, you subscribe to this. I'm also building in the space. You should meet with X, Y, and Z, or vice versa. And that's where I'm at right now. Just want more things to
Incredible.
write about. I have a massive list, and I'm happy to have it keep on growing. Because if I know somebody at the company, you'll probably go to the top.
Love that. I appreciate writing so much. Just for myself, it provides clarity for what I'm writing about and shows the gaps of the things that I don't understand. And so I'm sure that you probably feel the same, which is why I'm super excited to see the newsletter and to see more people who are writing about stablecoins, because they are such an important part of the infrastructure within the blockchain industry. And so, yeah, once again, Zach, thank you so much for joining us in this episode. Everyone, go follow him on the channels that he mentioned. I'll post links to those in the show notes as well. Otherwise, I think this wraps for episode 4. Thank you all so much, and we'll see you in the next one.
Awesome. Thanks for having me on, guys.